Founder and CEO of BitMEX, the Bitcoin Mercantile Exchange, which is the largest crypto trading exchange by volume. In a former life, by the way, he was a top trader for Citigroup. So, Arthur, it's great to get your analysis here on the subject. Welcome to the show. So tell us a little bit about BitMEX. You deal primarily with institutional traders, correct?
No, we deal primarily with retail traders.
Retail,
in North Asia. So our premise is that we want to give access to financial products to retail investors around the world using crypto, and right now that's Bitcoin. And so we offer highly leveraged derivatives, 100 times leverage we offer on the Bitcoin.
100 times leverage.
Correct, and our perpetual swap product is the most liquid trading product around the world. Does about 3.5 yards a day of flow. Okay,
so when we say it's by volume, it's because you're dealing with the retail trader, correct? And so they're presumably not trading the volume, the dollar amounts that institutions are.
Well, there's really not that much institutional presence right now in crypto. It is a retail phenomenon.
Are you equipped to handle institutional trades once that floodgate starts coming in, as so many people are predicting?
Absolutely. You know, we have an API, people can code against it, and we have a lot of prop shops and algo guys who've joined in because it's volatile, there's negative correlation to a lot of other asset classes, and they actually trade against real humans instead of robots all day.
The New York Stock Exchange just announced recently that it was going into also cryptocurrency trading, settling trades. And one of the biggest pieces was the custodial aspect. You have that figured out, though, correct? You have.
Well, we hold Bitcoin. We hold a large amount of Bitcoin. We have certain processes that we believe have made us safer than others in certain ways we do things. But at the end of the day, you still have to take that risk if you want to trade.
Do you think that there's a risk, Arthur, you just said 100 times leverage, and it's retail, and that's something that we know has been a real problem, especially in risk asset booms, right? I mean, how do you arrive at 100 times, and what's suitable, and is that something that is transferable to the United States? You said you're in Asia right now.
Yeah, so really it's a headline number. Most traders do not use 100 times leverage. The last time I checked, it was around 8.5 times leverage. So a lot of people use that as a testing ground or almost like a free option, if you will. I think the price is going to go up in the next 10 minutes. Let me place a little trade. If I hit it, great. I made 100% ROE. If I don't, I just lose my initial margin. So it's limited liability from the perspective of the trader. So unlike, you know, you go short XIV and you get carried out and you got to sell your house, on BitMEX, you just lose what you put in.
Arthur, kind of thematically, you talked about Asia, and clearly there's a ton of volume, and some are arguing that's 2/3 of the market. Why is that? And what do you see in terms of the U.S. retail presence in crypto in the near horizon?
Well, I think Asia dominates crypto because they're very used to trading digital assets. So take South Korea, for example. They've been trading digital goods related to video games for almost 2 decades. So when you move to a purely money-based digital currency, they understand that culturally, and so they grapple, get on board quickly. Take that to the West, where you have a very established banking system and things work pretty well. Why do you need to go out and find a new way to trade or a new way to do things? You have, broker that offers you options, futures, all sorts of different products. So you move that into the developing markets where you don't have these type of products, and you see people who are a lot more interested in it.
You've got a stunning Bitcoin forecast. Where do you see it going?
50,000 by the end of the year.
By the end of the year?
Correct.
Now, in January, were you a little bit wobbly about that prediction?
No. It's my job to make predictions. Whether or not they're right or wrong, it doesn't really matter to me.
Oh, so you acknowledge them. You might be totally off base.
Arthur, welcome to the show.
You could be one of us, I guess.
Why is that?
Well, I'm a volatility trader at the end of the day. We make our money if it's volatile. If it goes up, if it goes down, if you have, Bill Gates calling it a fraud, or we're harvesting babies, like, great. I mean, short it. I don't care. Or if you think it's going to be $1 million in a few months, great, buy it. Still don't care. We just match trades.
Arthur, hope you'll come back.
Thank you.
Fascinating to learn about your business. Arthur Hayes of BitMEX.
Just matched.
Man, that was funny listening to him and his outlook. And I don't know about you guys, but I have not been doing any kind of leverage trading. There is a lot of upside, so if that's something that interests you, definitely go check it out. And it is interesting that you're only risking what you put in. It's not like they're gonna go for additional amounts. I'm not doing that. I have no interest in doing that. Like I said, most of my investments have been in real estate, and real estate's pretty straightforward, and Bitcoin by itself without leveraging it is pretty volatile. So to go into that kind of trading, I feel like it's gambling. I feel like if you're going to do it, you should at least be following the market for at least a year, maybe longer. But like I said, I got into crypto in July, so I haven't even hit the year mark, and I have a completely different trading strategy. I totally believe in just buy, don't even look at it, and in a year or two, and if you look at the charts, the real people that make money in crypto are the ones that actually hold it for 3 or 4 or 5 years. So there's still a lot of room for improvement, a lot of room for growth. If you have that gambling personality and you already are losing money on sports betting, you're buying lotto tickets, you're just doing other dumb things with your money, then I would actually recommend this. I think this is a better way to be a degenerate gambler. So I highly recommend it. But if you're a long-term investor and you can hold on to this asset class for 3-5 years and you're okay with it, I don't think it's a good idea to get leverage. But let me know your guys' thoughts. I'm wearing these sunglasses because I have no idea if this video will get removed or not, so I'm just YOLOing and having a good time. So anyways, let me know your thoughts, and I will talk to you guys soon.